Yo, it's the Crypteller, and real talk. Over 80% of traders don't actually know what candlesticks are telling them. They stare at a chart, see green and red, and start clicking buttons. You're not going to be that guy. In this video, I'm breaking it all down, step by step. What candles are, how to read them like a pro, and how to understand who's in control of the market just by glancing at one. Forget guessing. Let's make you dangerous with the basics. Now let's talk about the two personalities every candle has. Bullish and bearish. Green candle means bullish. The price closed higher than it opened. Buyers were winning. Red candle means bearish. The price closed lower than it opened. Sellers were in control. But just knowing the color isn't enough. That's baby stuff. To really read a candle, you've got to pay attention to the shape, the size, the wicks, and especially where it closed. Candlesticks are the building blocks of every price chart. Each one shows what happened during a specific time, a minute, an hour, a day. You pick the time frame. Inside each candle, there are 4 key prices. Traders call it OHLC. Sounds fancy, but it's simple. Open is the price where the candle started. High is the highest point the price reached during that time. Low is the lowest point it dropped. And close is where the price ended when the candle finished. The thick part of the candle is called the body. It shows the distance from open to close. The thin lines above and below, those are the wicks. They show how far the price moved before settling. Here's where it gets spicy. Take any candle and divide it into 3 parts, top, middle, and bottom. Where it closes tells you who had the upper hand. For bullish candles, if it opens in the bottom and closes in the top, buyers had full control, strong momentum. If it opens in the middle and closes in the top, buyers gained control by the end, showing late session strength. Likely continuation to the upside. If it opens in the bottom and closes in the middle, buyers started strong, but couldn't hold their gains. Sellers pushed back, the finish is weak and uncertain. For bearish candles, if it opens in the top and closes in the bottom, sellers were in control the entire session. Strong bearish momentum. If it opens in the top and closes in the middle, sellers started strong, but buyers managed to push back a little. Market is still bearish, but strength is fading. If it opens in the middle and closes in the bottom, sellers took over mid-session and closed with strength. Momentum is clearly shifting down. Mini quiz. If a bullish candle closes in the middle, does that show strength or weakness? By the way, if you're just getting into trading, you're not alone. We've got a full crypto community on Telegram, where we share daily insights, simple breakdowns, and help each other grow. Whether you're a total beginner or already trading, links below. Some candles hit different. We call them extreme candles. When you see one, lock in, because they can signal that a reversal is coming. 1-1, opened high, closed high. Buyers crushed it. 2-2, opened and closed in the middle. No one's in control. Total indecision. 3-3, opened low, closed low. Bears owned it. These extreme candles come with an 85% chance the market flips within the next few candles. It's not magic, it's price psychology. Want the fastest way to spot trend direction without overthinking it? Look at the midpoint of the current candle. If the midpoint is above the high of the last candle, buyers are in control. That's an uptrend. If it's inside the range of the last candle, market is neutral. Expect sideways action. If it's below the low of the last candle, sellers are dominating. Downtrend likely. But don't rely on this alone. This method doesn't include volume, and volume is key to confirming if a move is real or just smoke. Now you know how to read a single candlestick like a boss. You're seeing market control, spotting reversals, understanding structure. That's a huge edge. But listen up, that's just half the story. Because candlesticks show you what happened. Volume tells you if it actually mattered. So let's take this to the next level and break down volume like a real trader. Volume is the engine that drives the market. It shows you how many people are actually involved in a move. A green candle means buyers won. But how many buyers? That's what volume answers. No volume means no power. Low volume means weak conviction. High volume? That's real market interest. Smart traders never look at price alone. They want to know who showed up and how hard they hit the gas. Before any trend shift, volume starts building. The market doesn't flip on a dime. First, orders increase, pressure builds, then the trend reverses. So when you see a volume spike before a big move, pay attention. That's your early warning. Even a small price change matters if it happens on big volume. That means traders are shifting sentiment, and shifts lead to momentum. Now let's step it up. Let me introduce you to a tool most beginners don't use, but pros do. It's called the Money Flow Index, or MFI. It combines price and volume, and tells you if the market is really ready to move. Here's the logic. If price is rising, but volume is weak, that move might not last. If price and volume are rising together, you've got confirmation. The formula is simple. Price range divided by volume. The result is a clear signal of efficiency, how much market impact each dollar had. You can break the market into 4 simple setups, based on volume and MFI. Let's go through them quickly. First, the green combo, volume up, MFI up. This is your go signal. Momentum strong, traders are jumping in, and you don't want to be on the wrong side of that move. Next, the fading combo, volume down, MFI down. The trend's losing steam, fewer traders are involved, and conviction is dropping. That's usually your cue to exit or stay cautious. Third, the false combo, volume down, MFI up. Price might look like it's breaking out, but there's no real force behind it. Classic trap. These are the fake-outs that wreck beginner traders. Last, the squatting combo, volume up, MFI down. Big volume comes in, but price barely moves. That's the build-up before a breakout. The spring is loaded. When it releases, it moves fast. Quick question. Which combo would you trust the most? If you said green, you're thinking like a real trader. Now you've got the full picture. You're not just looking at candles anymore. You're reading market behavior. Price shows you the story. Volume tells you who's behind it. And MFI, that reveals whether it's real or just noise. This is how smart traders think. This is how you build confidence in every trade. Not by guessing, but by understanding what the market is actually doing. If this helped you level up, hit that like button and subscribe, because this is just the beginning. And if you want to go deeper, ask questions, or get real feedback on your setups. Everything within our Telegram, links in the description. I will see you in the next one.